Hey, welcome to Money Club Mondays. It is January 2nd, 2023. So happy New Year's. Thanks for being here. And the topic today is going to be moving money in 2023 with the Private Money Club. So we're going to get into a little bit about what that looks like and what that's about. So happy to answer any questions as we go today and get things off to a good start for the new year. Us as a company, the Private Money Club and Money School, the Money Multiplier, basically all things money. If you're new to our network, we have a lot of plans this year. We're doing 23 events this year with the Money Multiplier, and the Private Money Club will be co-sponsoring those and traveling with the Money Multiplier to hold those events. So all about controlling your money and solving your money problem. We're going to have our quarterly virtual Money School Essentials 3-day trainings. We're talking about a couple, 2 or 3 other live events we're going to do out in the Salt Lake City, Utah area, co-branded with Tax Hive and Sean Finnegan. So a lot of cool things going on this year, a lot of new stuff, and Private Money Club as a platform, as a company, and as a community, which is why you guys are here. We have some awesome things planned and some awesome things coming up here this first quarter that we're going to be launching, and super excited to share with all of you very, very, very soon. So with that being said, yes, these are all recorded and they are put on the YouTube channel. So the YouTube channel is Private Money Club. So you can go on YouTube and search for Private Money Club, and it should pop right up for you. And also you can search for @the_Chris_Naugle, and that's another one of our YouTube channels that has everything on it. So you can watch those recordings there anytime. All right. So with that being said, let's go ahead and get started. So what are we talking about? Moving money with Private Money Club in 2023. Basically, what is Private Money Club, right? And why are you here? What are we doing with this thing? So let's get into this here. So as a lot of you know, the traditional ways of investing, things like the stock market, mutual funds, diversifying that way, that's not what we're here for. We're here to control our money. And once we control our money, we need to understand what to do with that money to be able to be smart about it, to grow our wealth, to reach our financial goals, to be able to retire the way that we want to, and the lifestyle that we want to. And we do a lot of examples of this, but today I'm going to focus on private money lending and what that looks like. So just a real quick 2-second review, ways we control our money. IBC. So the infinite banking concept, that's the specially designed and engineered whole life insurance policies. So what we do is we put our money into these policies. Okay. We put our money into the policies. Once the money's in the policy, we now have tax-free guaranteed growth, compounding, uninterrupted for life. So that's what an IBC policy allows us to do. Put our money into a vehicle where, like Chris was talking about before at the bank, where most people put the money in a bank and the bank maybe pays you 1% or something. We're putting our money in here. We have guaranteed tax-free, uninterrupted compounding growth for the rest of our lives. Then what this specially designed and engineered whole life policy allows us to do is take the money that we're putting into it out of it via a loan, and then do things like the Private Money Club, which we're going to talk about right now. Okay, so you can make different investments, different loans. You can do whatever you want with the money, just like banks do. Same thing that banks do. We're just creating our own banking system. And that's why they call it the infinite banking concept. But by putting our money into it first, we're creating this, and then we're going to do with it anyways what we're going to do anyway. So the loan comes out. So let's just say it's a 5% loan to take the money out of the policy. We do a loan, let's say at 12%. We're making that spread while the whole time our money's in there compounding and growing for the future, for the rest of our lives. So that's one, major source that I would say for private money lending through Private Money Club. Number 2 would be self-directed IRAs. So these are the 2 things to really focus on, in my opinion, this year right now. So retirement money, and then our everyday money, our savings and things like that, and just being very smart about that this year. And so what I really want you guys to think about is, how much can I get into my policies? Am I maxing out my existing policies? Is it time to start new policies? Can I get more money in there to take advantage of this? Because remember, compounding interest works off of time. So the sooner in life we can get money into here, the sooner you're going to take advantage of all of this, and the quicker growth, and the quicker we'll have efficiency to be able to take the money out to do other stuff with it. All right, so that's one. Number 2, self-directed IRAs. And the reason why these are so important is because of taxes. So for example, we can get our money into a Roth IRA and then do these real estate deals through Private Money Club And then all that growth, all those profits are all tax-free. And taxes absolutely kill wealth. So we just want to start being smart with what we're doing and very intentional on what we're doing. So when we're looking at 2023 planning, really focus, where is your money? Like I've been talking to a lot of people that are budgeting for 2023, which is excellent because what budgeting can do, and I've never been a huge fan of budgeting because my own personal reasons, but it's very good because it can find waste. And one thing that I've been finding is a lot of waste. And these days, it's very easy to get our phone out and click on like a subscription, click on something that creates a monthly ongoing charge. And even if it's like $10, $15, $20 a month, it starts to add up. And over time, that's a lot of waste and money that we could be getting into policies if we're not already. It's clearing up additional savings that we can have access to. So just being very intentional and looking at this stuff. So budgeting is a good way to find waste. Now budgets change over time and that's fine. And maybe you have a job where your income goes up and down or something like that. It makes it a little more difficult, but at least let's start identifying where can we get into there. And then of course, with the IRAs, we're just taking advantage of the potential tax savings that are involved with those. So to me, those are really, really good spots. Also still, HELOCs, we could still look at using HELOCs. Rates haven't gotten too ridiculously high. I mean, I'm still seeing HELOCs in the 5 to 7% range. So again, if we're doing a 12% loan over here, we're still making a decent spread on our money, that would otherwise just be sitting in the rafters of your house. So I still think that can be a good play as real estate prices are still high and there's still a lot of equity out there, but just some different places, okay? And if you want to learn more about the infinite banking concept, there's trainings all over the YouTube channels. You can go to the Chris's website, themoneymultiplier.com. You can go to my Nagy Leadership, which just brings you over to my link tree with all the different websites, NagyLeadership.com. If you want to learn more about IBC, self-directed investing, anything like that, all of our trainings are out there for you. All right. So with that being said, let's start getting into a little bit about what that looks like. All right. So now we have money sitting in a policy, IBC. Maybe we have money sitting in our self-directed IRA. Maybe we have a newly opened HELOC. So maybe we have this money. Okay, now what do we do with it? All right. So again, the stock market, most economists, even the talking heads on TV are starting to say it's going to be a tough year, 2023 for the stock market. So then what do we look at? Where are we looking to invest our money? Where are we looking to grow our wealth? And there's nothing wrong with being in preservation mode where maybe you're just pulled back kind of on the sidelines, but at some point you got to be prepared and you got to be educated enough to be able to jump into something new. So, there's two different ways that can look. You can have active and you can have what I call passive. And I'll put an asterisk next to passive because even with passive investing and passive wealth growth, there's still work involved, don't get me wrong, but it's not as active. So over here on the active side of what we're doing with our money this year and being intentional is active would be like starting a business, okay? Maybe you've had an idea that, hey, you could solve someone's problem and, maybe now's the time to actively start your own business. So maybe a business might be on this side, right? How about real estate investing? But real estate investing, things like flips, rentals, whether they're short or long-term rentals, maybe even development. What else? We have a lot of students doing land. So these different active ways that you can start going out there. Maybe, kind of precious metals. So we're just looking at different types of investing, what we call alternative investments, right? Even notes would probably be even more a little bit active. I think, was it Tess? Tess, are you on right now? I think, and by the way, Tess, congratulations. She sent me a text over the weekend. It was her last day at her job forever. She's gone. Congratulations, Tess. Tess is one of our students and clients and friends that's been around for a few years now. And there she is. So and you were telling me you just signed your first note deal. So that's really cool. So notes kind of takes a little active work to find them. You're going to need money to be able to get into notes. But once you identify them and you purchase them, you kind of move the notes from the active side over to the passive side. And I think that's what you'll kind of see, Tess, and that's the idea of it. So that's really exciting. So congratulations on all of that, Tess. Very, very, very cool stuff going on there. So we got notes. What else am I missing on the act? Does anybody else have any plans this year where actively they're either investing their money or investing their time? Because active can be time and money, where passive is more money and money. You're using your money to make more money. Over here is going to take more time to get that money going, right? So commercial, multifamily, yeah. So over here, the real estate side, we go through all the different types of real estate, absolutely. Commercial real estate. And then on the passive side, of course, we have private money lending, which we're going to focus on in just a second. What else do you have on the passive side? Like I said, you can move notes over here. What else is on the passive side of investing? Private funds, syndications. A lot of this is real estate based. And then you got some that are kind of in the middle, like precious metals, I would say is in the middle, like investing in gold and silver, because it could be on the passive side. You're not really generating income, but you can generate wealth. If you buy, gold at 2,000, it goes up to 4,000 and stays up there, a few stuff like that, commodities, things like that. I mean, oil and gas, that's more of a long-term play. So I like to kind of focus more on like generating income. And that's the nice thing about private money lending, notes, private funds, syndications, depending on what kind of business you buy. For example, I'll give you an example. So the way I buy precious metals is what the company calls 7K Metals. And 7K Metals is a wholesale distributor for precious metals, gold and silver specifically, meaning I pay an annual membership fee to 7K Metals, and I can buy precious metals at wholesale pricing. So it's similar to like an Amazon or a Costco or something of that nature, right? So I can buy precious metals that way, but 7K Metals also has a business aspect to it. It's set up in a network marketing type thing, where if you introduce other people to it, then you can earn commissions from, what those people are buying, basically. And so if you were to get into like something like 7K Metals, after you do some active work to talk about it or share with people, it can generate some income coming in on a monthly basis, just as an example. So just different ways that these can kind of work together. Private money lending, which we're going to talk about in a second. You're going to need to underwrite the deal. You're going to need to underwrite the lender of that deal. But once the deal's in place, it might take a few hours to do that. So that's a few hours of active. But then for the next 3 months, 6 months, 1 year, 2 years, 3 years, 5 years, 10 years, depending on the private money deal, that's all passive money coming in from that point forward. So there is a blend between some of these. But what you're thinking about in your own head is, okay, do I have money right now and I need to find ways to make that money go out there and make more money for me? Or do I have time and I need money to be able to have more money to go make the money, make more money for me? So maybe I need to be more on the active side and focus on more of this stuff. Okay. So that's all I'm trying to look at right now. It's like, what side of that coin are you on? And where do you want your focus in 2023 to be? And I guarantee you, like a lot of our clients and students and members over the last couple of years, a lot of you are starting right now more over here, but by the end of the year, you're going to be doing what I'm telling you. You're going to be more on the passive side. So all the work you're doing today is going to generate into passive stuff later on this year, going into 2024. And that's a beautiful thing. And then if you can work even harder to generate more money, be smart and intentional with that money. Again, IBC, how much more can we generate to put into our policies? How much more can we generate to put into tax-free environments? Tax advantage environments. How much more money can we generate to buy real estate to create more equity to be able to do more stuff with that, right? And once it's in these smart vehicles, intentional areas, now we're creating these passive investments and loans and things like that to generate more money. So that's how you really start snowballing wealth. That's why you hear people talk about all the time, like the first $1 million is the hardest to make. Why? Because you got to figure out actively how to do it. But once you actively figure out how to do it, there's so many strategies to follow out there and so many opportunities once you have money to be able to generate the next million and the next million and the next million. And not only that, but once you learn how to make that first $1 million, they can never take that education and knowledge away from you. So that gives you the ability, even if you lost it all, you hear this all the time too, right? You talk to any millionaire out there, hey, if you lost it all today, are you worried? No, they say they'll go out there and do it again. Why? Because they learned how to do it in the first place. So very, very important stuff right there. So if you have a W-2 job, if you have, you're going and working a 9 to 5, something like that, and you're barely getting by, it's time to think about a side hustle. It's time to start additional streams of income. So what does that look like for you? We'll give you lots of ideas and ways to do it. If you're working a full-time job on this list right here, I would say wholesaling. Wholesale. You could do that in your I'm not going to say spare time, but you can make time in the evenings and the weekends. You might not want to, but if you're living paycheck to paycheck, you're barely getting by, or you feel like you're in the same spot you were last year and the year before, and you're not moving forward and up, then you got to change something, right? And maybe you're not ready to jump and quit your job like Tess was able to do. And Tess, I mean, it took her a year to be able to do that. She actually told him she was quitting like 8 months ago or something, right, Tess? 6 or 8 months ago or 9 months ago. And they were like, well, you got to stay. And she ended up staying until the end of the year, which is great. But so it takes time to be able to make that move too. But in the meantime, Tess is on every webinar, comes to all the masterminds. She spends the money on herself, investing in herself to give her the ability to be in the position that she's now in, to be able to tackle 2023 now without the burden of that W-2 job, and can focus on her life and what she wants to accomplish and her goals 100% now. But it takes time to get there. So in the meantime, you got to make those lifestyle changes. I can't watch The Bachelor every Wednesday night at 7 p.m. or whatever. I can't go on the weekends and party and watch football and drink all the time, right? We all got to give sacrifice. So you either sacrifice your life in the long run, you sacrifice your life in the short term, but how long it takes you to get there, that's up to you. Because at some point, all that sacrifice is going to pay off. And now you get your evenings back. Now you get your weekends back. Now you get your holidays back. Now I could go for the last, several days and travel and have fun and do things and get right back into it when the time comes. So that's what it's all about, guys. So that's why I'm talking about this right here is, where are you now? Where are we focusing? It's January 2nd, 2023. This is very, 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 very important to kick the year off the right way. All right. So while I'm erasing this, put in the chat box. I want to hear who has tickets right now for an event coming up this year. Like, I don't care if it's next week, if it's next month, if it's in March. What is it though? Write the event in there. Is it a mastermind? Is it a virtual training? Is it a real estate? Is it life? Is it motivation? Like, what are you guys going to? What do you have tickets for right now that you're attending? I want new ideas too, guys. I mean, I got mine. Let's see. Yep, Sam, the weekend with Chris. That's this weekend, I think, right? That's going to be amazing. Jill's going to the experience in Mexico, Test Mexico. Heck yeah, I'll be at both those. Re-up Mara with Noah and Christy. I'll be there, Mara. Absolutely. Re-up, that's an excellent event. Training with a professional speaker. Love it, Tess. I'm actually, Chris and I are actually going to a speaker training ourselves in Las Vegas at James Malinchek's house in a few weeks. And I've been speaking for 14 years now. And professional development like that is so important, like to be able to take your skills to the next level. So I love that right there. Mexico, Master Carey, love it. Okay, cool. All right. So keep your eyes open, guys. We will share events that we're attending, going to. If you can make them, awesome. Like I said, we got a bunch of cool stuff planned for this year. But I want to know about other people's events, like Secret Knock. That's an excellent event, Test. I don't have tickets to fly out yet, but I probably can make it. I got a couple other things going on in that same time frame, but I'm probably going to make it to that. Secret Knock's a great event out in San Diego. It's just kind of far, but again, I'm making excuses. I shouldn't make excuses either, right? All right, so let's talk about Private Money Club. So we're intentional. We've decided, hey, we're going to do, let's just for the sake of argument right now, we're going to get into real estate this year. All right, so Private Money Club. Okay, here's the beauty of Private Money Club is whether you're on that active side I was just talking about or that passive side I was just talking about, Private Money Club can be a great solution for whichever one of those there is, okay? So what Private Money Club is, I know you guys like my my artwork, right? Okay, so we got that right there. So we have a house and we have money. When it comes to real estate, would you agree with me that both are equally important? And then we have the person too, right? Because real estate by itself does nothing. Money by itself does nothing. You need the people involved too, right? All right, so here we go. So would you guys agree with me that both are equally important? When we're talking about real estate investing, both are equally as important. You have to have a property to be able to flip or rent out or do whatever with when it comes to real estate. And this could be multifamily. This could be an apartment complex. This could be a single family. It doesn't matter, right? Real estate's real estate essentially. And then over here, money is money. So this could be coming again from an IBC policy, from an IRA, from a HELOC, from a business account, whatever. So money's money. And then you have the people out here. They're very, very important. So a house is not going to flip itself. A house is not going to prove itself. A house is not going to rent itself. You need people involved. just like money. Money's going to sit in wherever it's sitting until somebody takes that money and does something with it. So both very, very important. Now, when it comes to flipping, let's just say somebody's going to do a flip. Okay, all a flip means is you buy a house, let's say $100,000, you rehab it, meaning you fix it up, you improve it, you upgrade it, you make it look better, put paint on the walls, change the kitchen, update the bathrooms, put a new roof on it, put a pool in the backyard, put new landscaping out front, whatever. There's all different types of flips. Everything from just putting some paint on the walls to literally gutting the entire house down to the studs and rebuilding everything and everything in between. So the flip is the flip, but that's going to be what's called the scope of work. And we'll talk about that. All right. So let's say the rehab of that is $50,000. And then you have what is known as the after repair value or market value of what the house is worth afterwards. So let's say that's $250,000. That's basically what you sell for. So if we had bought it for $100,000, we put $50,000 into it, we sold it for $250,000. We'll just pretend the fees and everything are built into the rehab costs. That's $100,000 profit, right? So if this guy or girl right here just made $100,000 doing a flip, would they be happy? Yes, absolutely. Now, so this investor is like, okay, I found the deal. I have the team in place to do the work. I know I can get it done, and I know I can sell it for $250,000. However, the only thing I'm lacking to make a $100,000 profit is what? The money. So it takes $100,000 to buy it, takes $50,000 to fix it up. So that's $150,000. They need $150,000 to be able to make $100,000 on this deal. Fair enough? This is plain and simple, right? Now, you have this person over here. Let's call her Tess. So Tess is happy because she just quit her job. She's focused now 100% on herself and growing her wealth and just everything, right? I mean, just happiness. We'll call it happiness, right? Happiness. I'm good with that. All right. So Tess is just looking to grow her happiness. So Tess, however, doesn't know how to go out there and find the deal. Tess doesn't know how to go out there and put together a contracting team, nor does she want to deal with all of that. But Tess wants to make more money also. So Tess wants a piece of this $100,000 profit. So Tess says, okay, let's just call this person Joe. So Tess finds Joe, and Tess says, I have $150,000 right now sitting here, and I'm looking to make more money to improve my happiness in life. But I don't want to go out there and do real estate flips or anything like that. But I see that you need $150,000. So Tess goes to Joe, and they say, okay, well, Tess says, I'm willing to lend you $150,000 to do this deal. But for doing so, I want you to pay me, let's say, 12% interest, 2 points. You want it to be secured. And let's say she wants to be repaid in 12 months. And then maybe Tess wants some income coming in each month to go blow when she's traveling to all these events. So Tess will be in Buffalo and Mexico and San Diego coming up this year. So she wants some spending money to go out there and have fun when she's in these places. So she also wants monthly payments. So this person needs money to go make money. This person has money and they want to make more money with the money that they have. So they partner up together. They enter into a private money lending agreement. Okay. Any questions on that? And then we're going to talk about how that's done. So you can do this a couple ways. So how does Tess find Joe? How does Joe find Tess? You can go to networking events and start introducing yourself to people and kind of getting into that community locally and things like that. Or why we started Private Money Club was for this exact reason right here. So let me show you what this looks like. And this will be just a quick, I'm not doing a whole demo of Private Money Club. Let me show you the platform. All right, so you hop on Private Money Club. This is what the membership looks like if you're already a member. So once you're on here, you can, if you're Joe looking for money, well, you can go on here and you can start connecting with other lenders. So you can look for people that are lending money. You know, maybe you need $100,000 to $150,000 search. Then we can start going through and say, okay, they're looking to borrow and lend. Let me look at this guy. Okay. Doesn't really have much in his profile, but let me send him a message. Hey, I'm looking to borrow money. You want to check out my deal, you know, blah, 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 blah. So you can connect that way. If you're Tess looking to lend, you know, you go to browse our deals. So you go start looking at people's deals that they posted. So let's see here. So this is, so if I'm Tess, I'm on here right now looking at all these different deals saying, okay, which one of these do I want to lend on? Okay. So I can read through it. 248, you'll receive interest payments, blah, blah, blah. So everything on there is that I would want to know. 20%. Sounds good. How it's all set up. So you can read through that. Okay, maybe claim somebody I want to talk to. So you click I'm interested, type in your message, and boom, you guys start that conversation. So this is how you start looking for people, right? Or looking for deals. And then as a borrower, put your deal on here. And then if you don't really understand yet, where I would start is in the learn section. So something, if you're a borrower or lender, I would definitely understand the perfect loan proposal and how that works. We talked to perfect loan proposal a little bit on the 2-hour coaching call we did last week. You can read through how to post a deal the right way, best practices, how to delete a deal if you did something, looking for deals. So start getting on here and looking through the different articles and different things that you can start doing. So this is a little private money club, right? We got some education, we got some training. We do the coaching once a month. We do these. You can browse deals, you can post your deals, you can interact with the other members. We'll have the forum will be on here this week, so you can actually post topics, and it'll be a group forum, so we can have group discussions on the Connect section. So that'll be, it's supposed to be implemented this week on there. When you're analyzing a deal, you can use house folios to help you underwrite the deal, which we'll talk about in just a second. And then, like, just for example, if you're Tess, you know, she knows she's going to make 12%, $150,000. She wants to do it for 12 months. So she knows that she'll have $1,500 a month coming in if she was to do that deal that we had talked about before. So I'll show you what that looks like. All right, here we go. Oh, I see a couple of questions. Let me hit these. Art is a huge investment commodity. Yeah, art is considered a collectible. So one of the odd things about that is you can't like use a self-directed IRA to buy art because of that. But yeah, definitely that could be a huge. If you look at the history of artwork, it's amazing how the prices have skyrocketed. So Ronald's attending the Residential Assisted Living Academy, the 19th through the 22nd. That's an excellent conference, Ron. So you'll have a great time there. Usually Brent Kessler heads down and presents at that each year. Yeah, George, the Mexico event is actually sold out. So we're starting to plan the next one, and we'll definitely post information on the next mastermind as soon as we can. All right. So Tess has 150K. She wanted 12% return. She wanted 2 points, monthly payments, 12-month term. She wanted protection and security. Where Tess has the money. And then over here, Joe needs 150K. But Joe's got the house. So let's figure out how we're going to make this stuff work. All right. So the first thing Tess is going to do is Tess is going to go in and say, okay, who is Joe? So this is what I want you as the lender, the person with the money, Tess. I want you to start thinking like the bank. Okay, so this is the most important thing you can do when you're thinking to yourself on what to do in private money lending and the private money club. Think like the bank. Do what the banks do. Mimic the banks. It's literally that easy, okay? Okay, so what does that mean? So if you were to go into a bank and apply for a loan, is the bank going to lend you money without checking your credit score, without checking your employment history, without checking your W-2 income or your tax records? No. So when you're lending money to somebody, do you think maybe that's something you might want to know as well? Maybe. If we're thinking like a bank, who is Joe? What that means is we're going to underwrite Joe. So we're going to look at what I would do is I would start asking Joe about his records. So we can ask Joe for a personal financial statement, okay? A personal financial statement is basically, I could show you guys one. I don't want to take the time to pull it up right now. You do have access to personal financial statements and other things within Private Money Club through the Teachable platform, Money School TV. So make sure if you don't have access to that, you get access to that, but it's all on there for you. So a personal financial statement is basically like a balance sheet for the individual. So it shows their assets, their liabilities, their income, their expenses, all that good stuff. So a personal financial statement will give you most of what you need to know. So then from that, maybe you want to request more. Maybe you want to see tax records. Remember, you're lending to an LLC, so proof of LLC. Even maybe it's a new company, maybe it's been around for a while, but this is stuff you can look up on a state website. So if you wanted to look up like Private Money Club, you can go on whatever state website, look up Private Money Club. It shows you who the owners are and all that stuff, right? So any company you can look up, it's all public information. So we're going to look at person's financial statement, maybe some tax records, maybe proof of their LLC, maybe a credit report. That's up to you. Again, I mean, if I'm lending to somebody based on the asset, I don't really care as much what their credit looks like in the past, but I want to know more about who they are. And so, one of the reasons we really encourage the borrower, people like Joe, to do the perfect loan proposal is because the perfect loan proposal is a template that's going to basically force you to put all of this together. So then when Tess comes up and Tess says, hey, I got $150,000, you need $150,000. The only thing holding me back from giving it to you is this information. If you already have it all together in the perfect loan proposal, then boom, you hand it to them. They can see it all right there and you're ready to go. You don't have to waste any time getting all this stuff together. And again, you don't have to do all this. I'm just giving you ideas on things to look for when you're underwriting an individual. So what's their background? Background and experience. Would you agree with me that if you were lending money to somebody, and let's say this is Joe's first flip ever, he's never done a flip before, it's his first one ever, that the risk for that might be a little bit higher than if I was lending money to Joe and Joe does 100 flips a year? Maybe, maybe not. I don't know. But that's something that I want to know about. And if they don't have experience in flips, for example, well, what is their experience in? Maybe they were in construction for 30 years and they just broke away to do their own thing. Maybe they worked with another flipper for years doing like the carpentry work and now they're doing it on their own. Maybe they were in finance or banking and they learned how to like find really, really good deals. And they can use that knowledge along with their relationships and their network to do flips. Or maybe they spent a ton of money and hired a coach and a mentor and, they really know what they're doing, but it's still their first flip, but they have a very solid like education and they know what they're doing and a plan in place, like then great, right? So it's all risk first reward. Risk, how high is that risk and how low is that risk? And that helps determine, hey, do I want to lend to that person? And hey, how much is it worth it to me to lend to that person? So these are all things that maybe you want to know about Joe, okay? So that's step one or step two, depending on which way you do it. All right, so once we underwrite the person, then what do we got to do next? We got to underwrite the deal. And are both equally as important? Absolutely. Because you can lend to somebody, the deal is unbelievable, but if that person has no clue what they're doing, they can lose money on that deal very, very quickly. This is not a game for the weak by any means. And vice versa, you can lend to the best investor in the world that does 100 flips a year, but if the deal sucks, nobody can make money on it. So both are very important, in my opinion. All right. So how do we underwrite the deal? All right. So now that we know who Joe is, what's the deal? Right. So what are you going to want to know about? You have this house here. Okay. Obviously, you want to know the purchase price. Remember, we established that 100,000, and then you're going to want to know what the rehab is involved. So what's the plan for it? Okay, let's say it's 50,000. Okay. Well, where does that 50,000 come from? What is that? Like, where is that money going? So that's where you're going to look for, preferably, like a contractor puts together an actual work order with prices and everything that's involved with that deal. Or what we'll look at from like the investor side is what we call a scope of work. And the scope of work is going to detail every single little part of that deal. And again, this is part of the perfect loan proposal, what that we call the property spec sheet. But what this does is it breaks down every single little bit of work that's involved with doing a real estate investment deal. So it's going to break it down, the scope of work or the deal spec sheet. So, all right, so just a quick glance at this thing. So this is what would be a property spec sheet. Something a little bit more detailed than this is inside that perfect loan proposal, but this is stuff you need to know on both sides of the fence. If you're the borrower, you need to know this so you don't get yourself in trouble. If you're the lender, you need to know this to make sure the borrower knows what they're doing and they're not missing anything. So information about the property, location, so all your standard stuff, again, so you're not missing anything, right? If there's an HOA restriction, but you're pulling up comps that are not in HOA restricted areas, it's not the same. So you need to know that. If it's an agricultural zone, whatever, like this is all stuff you need to know. How old is the stuff that's in the house? Like if the air conditioner is 15 years old and it's in Florida, it should be replaced every 10 to 12, and they're not including it in the rehab. Well, why'd they miss that, right? So this is all stuff that we need to know. And then the comps. So the comps are what tells us, hey, that's what this house is worth today. This is what it's worth after rehab compared to other like similar properties in the same area. And then there'll be a place to list out the actual comps. Even better than comps are an appraisal. So getting an appraisal done today before the rehab, and then the comps are an appraisal once everything's done. That's even better than comps. So then these are the repairs that they're doing. So maybe replace roof, update kitchen, update bathrooms, how much that costs. So you want to break that down, be very specific, painting house, new flooring, landscaping, maybe you need to put shutters in the house, whatever, right? So every single little thing needs to be done. Marketing strategy. So how you plan on, this is like your exit strategy, how you plan on selling it, what that looks like. And like I said, the one that's in the perfect loan proposal is actually a little more detailed than this because it's going to get into other costs. So it gets into holding costs as well. I just wanted to give you a quick example that I had up, but it'll get into holding costs as well. So things like utilities, electricity, lawn maintenance. If you're up in Buffalo and you're in the middle of a flip, well, you might have to pay somebody to come plow the driveway when it snows 3 feet, because how else are your construction guys going to get there to do the work? So heating bills, everything while you're holding that property, including the interest that you're paying. Remember, she wants monthly interest payments, taxes, insurance. Remember, she wants security and protection. Insurance is going to be part of that. So these are all costs that are involved that need to go into that overall rehab. Because remember, if they're buying it for 100 and they're saying they're going to put 50 into it to make 100 grand, but that rehab is really $100,000 and that property is going to sit longer on market than they expected because it took more work. Well, guess what? That profit margin drops drastically. And if they run out of money, then you as the lender start worrying about, are you going to get your money back or not, right? So that's why it's important to underwrite that deal. So every little thing in there. And that's why, as the lender, you want to know all this stuff up front to make an educated decision when you're lending your money on that deal or not. So who is Joe, or who is the person doing the work? And then what is that deal? What does that look like? All of the costs involved. And then you take a look at all of that and you make your decision. Okay, I'm willing to lend or not. If you decide you're willing to lend, how much do you want to charge for your money? Okay. Tess was thinking 12% annual, but then she underwrites the deal and says, or underwrites the person and says, actually, there's a little more risk involved on this deal than what I was anticipating. I'll still do it, but I want to get paid more to do it. So I want 15% returns or whatever, right? So that can all be negotiated next. But first, we want to underwrite the deal to determine what the structure of that looks like. All right. Now we've done that. So let's talk about what this looks like. Any questions on that? I got two. Let me read this. Hold on one second. Yeah, due diligence. Very, very important. Absolutely, Tess. All right. So Ernest, have a question regarding licensing for private lenders. As lenders through PMC, we usually aren't doing the underwriting. So is licensing a requirement? Well, so Ernest, so when you go into Private Money Club and you identify and you see like a posting on there of somebody looking for money for a deal that they're doing, it's up to you. So it's a private lending deal. You're not giving Private Money Club the money and Private Money Club is doing everything. That would be a private fund. So for example, like I'm a partner in what's called Inicio Capital Group. Inicio Capital is a private fund where you give Inicio Capital your money, and then me and our partners are the ones that go out there and find deals and underwrite the deals and decide to lend the money on those deals. And then the money gets paid back, the profits, the interest, the profits, whatever, get paid back to Inicio Capital. And then Inicio Capital distributes it back to you as the investor. So that's a private fund. Private Money Club is literally a bunch of Joes that have deals and a bunch of Tesses that have money. Private Money Club is just a platform for those two people to meet. Then once those two people meet, what I'm showing you is how to be smart if you want to decide to lend your money on these deals. Okay, does that make sense? And if you have any questions on that, Ernest, just let me know. But ultimately, it's your decision. So again, when I'm on Private Money Club and I'm looking at deals, let's say I'm Ernest right now and I want to lend on a deal. I got money and I want my money making more money for me. It's my job to go on here and identify a deal. So nope, I don't like that one. 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 Let's see. Ooh, this one looks interesting. Let's see this one. Okay, 12% return, 250 needed, perfect flip project on Lake Murray. Okay, this one sounds interesting. Yeah, maybe I want to lend on this one. Okay, if I want to lend, maybe I want to lend on this one. You know, it's the amount I'm looking for. It's a good return. It's in the range that I'm wanting. You know, I can make 30 grand on it. Looks like a cool property. I like South Carolina. Okay, yeah, this is one I could lend on. Okay, then I'm going to start that process that I just outlined with you. What is that process? Just to review, who is Bobby Tyndall and what is this deal? And the way I'm going to do that is what I was just showing you. I'm essentially doing due diligence. I'm just calling it underwriting because that's what banks do. I want you to think like a bank, but essentially I'm doing my due diligence. Who is the person and what is the deal? And is it worth it for me to lend my money to that company to do that deal, right? Let's see. Ernest said the borrower usually creates the contract based on the terms. Yeah, so let's get into the contract and stuff now. All right, Ernest, so we're going to get into that now. Now, there's a couple things in here, right? So let's say Tess looked at it, looked at Joe, looked at the deal and said, all right, I'm in. So this is where they can start negotiating the terms, okay? So what are those terms? Over here. These are the terms of the deal. And the terms basically state when Tess lends money to Joe's company, that Joe's company is going to abide by those terms or else. That's all it is, okay? And the way this is done is with basically two primary documents, promissory note and a mortgage or trust deed or deed of trust. It's different in different states, but whatever. All right. So the promissory note and then the mortgage or deed of trust. So deals that you enter into like this should have these documents in place. Okay. And then there's other little things that are very, very important, which we'll get into, which we can start getting into next week. Next week, if you guys want, we can dig in deep on promissory note setups, mortgage setups, how they work, things like the rules of private lending. So like you only lend to an LLC, you're only going to send money to an escrow company or an attorney that's going to verify everything. You're going to make sure that this paperwork is all documented and filed at the county courthouse to make it legal, public record. It needs to be filed at the county courthouse. So all of that stuff that goes into this, we can go into next week, if you want to call it part two, so to say, of doing private lending deals as we're getting to the top of the hour right now. So I don't have time to really get into those details, but let me lay it out. All right. So these terms over here are going to be stated within the promissory note. So the promissory note lays out the terms, and then the mortgage or trust deed is the or else. Okay. So the promissory note is going to say, the promissory note is going to list the amount of money being lent, how the money is repaid. So in this case, it'd be monthly interest payments. Because remember, Tess wanted monthly income coming in. So if we take 12% annual, $150,000, 12% annually, interest paid monthly, that's $1,500 a month. Okay, so Tess knows she has $1,500 a month coming in that she can go play with when she goes on all these trips. And then a 12-month term. So Tess also knows that she'll get the $150,000 back in 12 months. Now, there might be no prepayment penalty. And Joe might say, I'm going to get this job done in 9 months. So Tess might get her money back sooner than 12 months, but the max would be 12 months. Now, if Joe says, well, it might take longer than 12 months, then maybe there's an extension that's written into the terms that's connected. So just in case that happens, you can extend it. Or maybe she says, if you pay me back before 12 months, there is a prepayment penalty of whatever. So again, this is all negotiable, but this is what needs to be in that promissory note stating exactly what's going to happen on this deal. So that way Joe knows as soon as he receives that $150,000, within 7 days, those first monthly payments are going to go out. Points. What are the points? Points are just 1% per dollar lent out total, no matter the term. So it could be a day, a week, a month, a year, whatever. A point is a point on the total amount. So when are the points paid? So if you want 2 points paid up front, paid at end, whatever that is, but that needs to go into the terms. So we have the interest, we have if there's anything extra, how they're repaid, what the length of that is for the repayment. Okay, so that's what would go into that part of it, the promissory note. And then again, the mortgage or the deed of trust is the protection. So remember, she wants protection. She wants security. So basically the mortgage says, hey, Tess is the first lien position mortgage holder of this mortgage on this property. And this promissory note is attached to this mortgage. So basically what the mortgage says is if Joe's company does not abide by the terms that are in this promissory note, then the mortgage document can kick in and it gives Tess options for recourse to be able to get her money back if Joe stops paying her money back. And that can be done different ways. You can do something like a deed in lieu written into the contract where basically, and again, this is state by state stuff, so you're going to want to get attorneys involved. I'm just kind of giving you some different ideas of what's happening. So you can do deed in lieu. So if basically the promissory note is not abided by, instead of having to do a foreclosure, which a foreclosure could be an option, you could foreclose on it. But in lieu of a foreclosure, it's written right into the document that if they don't abide by the terms of this thing, that the deed of this property is written over to Tess. She takes control of it, and he's now out of the deal. Just if something goes wrong in the PN, like it can be written into the mortgage that way a lot of times. So you could do that. So you could take it over. But basically, the mortgage is the legal document, and that's why it's important to have it filed at the courthouse, because it needs to be public record that this is what's going to happen. And then the courts and the lawyers can get involved to make sure and enforce that it happens if anything was to go wrong. So that's all stuff that can be built into it. A personal guarantee, you'll hear that sometimes. So if there's a personal guarantee involved, let's say that this deal goes bad, Tess gets the property, she forecloses on it and sells it off, but maybe she only gets $120K out of it. 120,000. Well, remember, she lent 150,000 plus all the interest and everything. So let's say Tess is owed 180,000. She only got 120. So she's short $60,000 from what this deal was supposed to do for her. So she can, with a personal guarantee, not only can she go after the property, but with a personal guarantee, she can go after the investor as well. So a lot of times they'll do a personal guarantee to get the deal done. So that way the lender is even protected even more. So that way she can go after that $60,000, 60,000 that she couldn't get from this, she can get from Joe directly, right? So different things like that. And that all goes into the protection and security. Also something important, make sure that in the mortgage or in the PN, I should say in the promissory note, that it's stipulated that you will be added additional insured. Your mortgage at your house, if you cancel your insurance or something happens with your insurance, that mortgage company, that bank is going to require you have insurance on that property. Well, same thing as a lender. You want to be named the additional insured. So if a natural disaster or a house fire or some kind of other, something happens, the insurance company doesn't pay them all the money. It's your money involved in that deal. So you want to be on there as additional insured to get the money for that deal if something goes wrong. So make sure that they list you on there, you get a copy of it, and it's built into the promissory note that if at all times you're listed as an insured on that property, and if you're dropped off of there, you have the right to either purchase it and charge them, or you have the right to enforce the mortgage and foreclose on that property to take it back. So just another little thing right there to protect you as well, being the personal insured on there, or the additional insured, the personal guarantees, little things like that. So these are different things that go into that promissory note. Again, that states the terms of how all this works, and then the enforcement document to make sure that you're protected in a court of law if things do go wrong. So a couple of people were talking about first position. Let me hit that real fast and we're going to wrap for the day. Okay, so you'll see different lien positions on deals, and this is very common. You'll see this on Private Money Club. You'll see this all over the place when it comes to note investing, tax liens, even a lot of times you'll see this, but you have different lien positions. So this house right here can have liens placed onto it. Meaning what a lien basically is when you go to sell a house, a lot of times the liens have to be fulfilled before ownership is transferred, right? I'm not gonna write all that out. You guys get it, right? So when you sell a house, they do a search on the property and it finds any liens that are due. So if you're selling a house for $100,000, but it's got a lien on it for $50K, basically you're not going to be able to transfer ownership of that property, the deed of that property, until the liens are satisfied. Does that make sense? So you're going to have different lien positions, what you're going to see. So most commonly, a first lien would be a mortgage. So a lot of times you'll have a bank mortgage. Or if you're a private lender, and like the deal I just showed you where they found it, you're going to lend to them right up front. There's nobody else involved with it. You as the lender would be first lien position holder. Okay. A lot of times a second lien, you'll see like a HELOC, or on Private Money Club, what'll happen is they'll have like a hard money loan that's in first lien position, or even a mortgage from a bank in first lien position. And then they're looking for a second lien for like rehab cost or something, right? So using Joe before, maybe he used a bank or a hard money lender to get the initial $100,000 for the purchase. And then he's looking for a second lien for $50,000 for the rehab cost. Remember, he needed $150,000 total. So maybe he needs only $50,000 for the rehab because he's already got a first lien position on that one. So the reason why people say second liens are a little bit more risky or, whatever, is because if something goes wrong and a foreclosure occurs, it goes in order of the lien position. So when this house goes to auction, let's say it sells for $110,000 at auction if something goes wrong. Well, the first lien is going to get their $100,000 back first, no matter what. So that takes $100,000 out of this. So there's only $10K left. But you lent a $50,000, but there's only $10K left. So you get your $10,000, you're out $40,000. You lost 40 grand on that essentially. There's nothing else. There's no more money in the deal. So when you're looking at second lien, you just want to make sure there's enough equity, there's enough room in the deal to get your money back after the first lien or your priority liens above you are paid back. And this can keep going down the list, right? Third, fourth, fifth. So you just want to be careful there and make sure there's enough meat on the bone where something goes wrong. But that's what liens are. Does that make sense? So they go in order. What position are you? So that's why in private money lending, first lien position is like the gold standard, because if something goes wrong, you have first rights to get your money back before anybody else that's out there. Ernest said, for smaller lenders, I found for a lot of deals, we are used mainly for gap funding and we're not. Yeah. In gap funding, you'd be set. Yeah. Just like I showed you, Ernest, they have the first lien in place. They're looking for a gap funding, which would be like to do the rehab or something. Personal guarantee backed by a borrower's personal assets. Yeah, you still would want to be a second lien because you still want to have a piece of that property. And that's going to give you the mortgage and the promissory note and everything on there. But definitely build in the terms that there's a personal guarantee where you can go after their personal assets, their company and personal assets if something goes wrong on that deal till you get your money back. So yeah, it's all in the wording of it and making sure it's done right on the front end. So absolutely on that, Ernest. Well, that's it for now. So this is, again, the first Money Club Mondays of the new year, 2023. So thanks for being here. I look forward to doing these each and every Monday with you guys moving forward. We have some new things. We'll be bringing borrowers on. We'll be talking about different deals. We'll be bringing different different experts on, talking about different subjects each week. So if there's anything specific you'd like to hear, shoot me an email, send me a text. Let me put up real fast. If anybody's not a member of Private Money Club yet, let me just put up a link where you can schedule a demo call. If you want somebody to walk you through Private Money Club and show you all the features and benefits and what it can do for you and help you out before you get started, let me put in the demo. You guys can schedule a call right on here, and one of my real estate experts will walk you through. All right, so right there is the link to schedule a demo call. If you're not a member or you have any questions and want to ask them about becoming a member, just schedule a call right there. But otherwise, I hope you guys had a great New Year's, great holiday season. You're ready to get out there and hustle right along with our team in 2023. Let's make it magical. Let's have some fun and let's all make some money. So thanks for being here, guys. We'll see you next week. See you this week on our other webinars. Cheers.